Welcome back to Palisade Radio. I'm your host, Tom Bodrivics, and joining me today is a returning guest to the show, Bob Moriarty. He's the president of 321 Gold and 321energy.com. He's also the author of several books. He's visited over 500 mines in the world, and he seems to be just an absolute wealth of knowledge in all of these areas. How are you today, Bob?
I'm doing very good. Thank you.
It's great to have you back. One of the things that we were talking about before the show here was you wanted to touch on COVID and how we're basically never going back to how things were. So could you share a little bit more about that with us, please?
Okay, there's actually two issues at work here. It's very important to keep them separated. There is the economic issue of we're in a depression, and then there is the COVID issue. COVID is being blamed for the depression, but the depression was absolutely written in rock. It was something I was predicting a year ago. I thought we would have a market crash in October, and instead in September, the Fed came in and started pouring $100 bills on a bonfire. We've got $250 trillion worth of debt in the world. Mathematically, it cannot be paid. And governments have used the COVID as an excuse for shutting down the economy. But regardless of whether you believe COVID is real, which I don't, or not real, the damage to people is far worse economically and through lockdowns than it is through the virus. Now, I'll point one thing out, and I try to show this in my books. If you learn to think for yourself, you can figure things out very simply. According to the U.S. numbers, the U.S., with 4% of the world's population, has 25% of the world's cases. Now, that's mathematically, that's absolutely not possible. How could we have 6 times as much of the disease as any other country in the world? And the answer is the tests are not testing for the Wuhan flu or COVID-19 or whatever you want to call it. The tests are testing for any coronavirus, which is a cold, or the flu. So we're coming up with numbers that are totally bogus. Now, the government knows the numbers are bogus, but the government wants to lie to us and wants to keep us totally petrified in order to take our rights away. But the lockdown will kill a lot more people than the flu, and the economic depression is going to kill 10 times more. If you watch the movie The Big Short, they used a figure in there. They said for every percentage increase in unemployment, there will be 40,000 excess deaths. So if you multiply that times 20%, you've got a lot of people who are going to die early because of the depression. Now, I am heartbroken. I am staggered. 53 million Americans have lost their jobs. 53% of the storefronts in San Francisco are closed permanently. The Hilton Hotel in downtown Times Square in New York City has closed permanently. The Black Lives Matter riots have destroyed many of our cities, and it's going to get worse.
Yeah, there's some crazy numbers that you touched on there. One of the other things that we were talking about before the show was landlords aren't allowed to foreclose on anyone until January 1st. And one of the other pieces to this that you were mentioning to me was the possibility of not having an election.
Okay, well, there's two issues there, and here's the real issue. Do you happen to recall who it was that came out with the executive order that said you can't evict people until January 1st? Because who said it is far more important than what was said.
I couldn't tell you who said that.
It was the Centers for Disease Control. Now, my question when I read it was, what the hell does the CDC get the right to dictate to Americans that they don't have to pay their mortgages or pay their rent, while it appears at first glance, oh, goody, honey, we don't have to pay the rent. Well, wait a minute. What happened to the guy who rented the place to you, who's got bills of his own, and he's counting on the income? The government is taking a giant thermonuclear bomb and blowing up the economy, and they're acting like we're doing this for your own good. I'll be absolutely blunt. They need to go to the CDC and burn the goddamn place down and fire every idiot who works for that place. This is the Centers for Disease Control. This isn't the Treasury. It isn't the Federal Reserve. This is CDC is saying you can't do evictions. So we're going to bankrupt everybody whoever bought a house and rented it to somebody else. We're going to bankrupt every mall in the United States, and we're going to bankrupt the banks. That's totally insane.
Yeah, it doesn't make much sense why the CDC would dictate legislature like that. Bob, you were also saying that in 2008 that we should have let the banks collapse. So what do you think that would have meant for the average person back then, and why is it so much worse now?
Well, it would have been very bad for the average person. However, it was required. So now it's going to be 10 times as bad, and there's no longer a choice. We no longer have the choice of saying, okay, we're going to let the banks go under. The banks are going to go under. You can write that down on a piece of paper. You can take it to the bank, and you can cash it. There is absolutely no way that 53 million Americans can lose their job. They don't have to pay the rent. They don't have to be evicted. And the banks are going to keep operating. What the government's going to try to do, and I have predicted this, they're going to try a dozen stupid ways of keeping people from finding out what's going on. Every single one of them is going to fail, and eventually they'll go back to honest money. Here's what we need to do. You got a next-door neighbor that you like, and you loaned him $100, and he's a deadbeat, and he doesn't pay it back. What do?
You ask for it back in silver.
Okay, and he says, pound sand. What do?
I could tell you what I would want to do, but...
No, it's not a question of what you want to do. It's a question of what you have to do. What do you have to do?
You have to get it back in any way you can.
Nope. He can't pay.
So what do?
You write it off. Are you telling me you've never loaned money to somebody and gotten stiffed? Because if you have, you're the only person I know that could say that. Everybody loans money to people periodically, and everybody gets stiffed. The key to it is all debts get paid. They get paid either by the borrower or they get paid by the lender. Now, from a mathematical point of view, when you have interest on loans, you always have more debt than there is money, because the debt continues to increase, but the money does not. So eventually you have to have a jubilee, and a jubilee is nothing but a mass write-off of bad debts. We have 258 trillion in debt. It's not going to get paid. It cannot be paid mathematically. Every large city in the United States is functionally bankrupt now because of all the promises they've made to the civil servants that they can't possibly pay. The key is that every dollar that a government spends, they have to collect. And there's 3 different ways they can collect it. They can collect it in taxes, and of course we don't like that. They can collect it in default, and we don't particularly like that either. Or they can collect it in inflation. What the government is trying to do now is to collect it in inflation, and at some point, the citizens lose faith in the government and the currency, and that's when you go into hyperinflation. You had mentioned a figure that I've used in another interview. In 1922, in Germany, the rate of increase in the money supply was 50%. By 1923, they had gone into hyperinflation. The rate of increase in the money supply in the United States this year is 68%. I absolutely believe, and I'll admit I could be wrong. I'm wrong all the time. I believe we're going to go into hyperinflation and it will destroy the currency, and that's going to spread throughout the world. All fiat currencies are going to evaporate.
Yeah, it doesn't make sense how every single fiat currency in the history of the world has gone to zero, and yet somehow we think that this time it's different, right?
Yeah, exactly. I mean, you just raised a really good question. One of the comments that I make in my book is, in every bubble, there's somebody running around saying this time it's different. You had mentioned some people that you talked to or read or heard about who were saying we were going to have Comex defaults. Well, that bullshit's been going on for 20 years. We haven't had a Comex default yet. And there was one very prominent, and he's actually a good thinker. I actually like a lot of what he's saying. And he, in effect, was saying this time it's different. And I just don't believe that. Markets go up and markets go down. No big deal. Everybody got really enthusiastic about the resource markets, and we're in a correction. Corrections are not the end of the world. Corrections just get rid of the people who think there's some easy way to do it. You got to work to make money. Nobody's going to hand it to you.
Yeah, absolutely. I appreciate you weighing in a little bit on the Comex debate. And, you know, you were explaining to me that you were a commodities broker for a long time. So that obviously informs. And could you share with us a little bit about how those contracts would get settled if they were, quote unquote, to not be able to deliver physical?
Well, here's what's very important. When you're trying to con someone, you tell people things that are perfectly true and perfectly meaningless at the same time. Now, let me give you an example. I am wearing purple and red socks. Is that true?
It could very well be true, but it doesn't necessarily mean anything to me.
Well, you're pretty close. In fact, I am wearing purple and red socks. But because it's true, doesn't mean it's meaningful, okay? There is no legal, moral, or even logical reason to have physical delivery of commodities. Have you ever traded or invested in any commodities?
Me, myself, no.
You ever bought the S&P futures or the Dow futures?
Nope.
Okay. When someone buys the S&P futures, how many shares physically are actually being traded?
Probably none, because it's all on paper, right?
Well, it is a fictitious contract. There are no shares, okay?
Are physically trading. Mm-hmm.
The guy buying it, there are no shares, okay? It's one of those things that's really interesting. The purpose of commodities trading is not to trade commodities. Everybody thinks, well, damn, it's commodity trading. It's got to be trading commodities. You got to trade commodities. Actually, it's not. The purpose of the commodities exchanges is to determine price. And you do not need a physical commodity to determine price. And people will go in because they think the S&P should go up or they think the S&P should go down, and they will buy or sell the S&P futures, which is a totally imaginary contract, but it works, and it tells people what the S&P should be. It's true wheat, it's true corn, it's true gold, it's true silver. So they run around and say, well, Jesus, you know, these guys can't deliver gold. Do you have any idea of how much physical gold there is in the world in terms of yearly demand? Okay, if X ounces of gold are demanded, supplied this year, how many years supply of gold do we have on hand?
I guess it depends on the demand of the year. This year would be obviously an exception compared to the last 10, right?
Actually, it has almost nothing to do with it. There is a 70-year supply of gold above ground. The actual year-to-year production is virtually meaningless. You could go for 20 years with no production of gold, and there would still be plenty of gold around. There is no shortage of gold. There is no shortage of silver. There have been 49 billion ounces of silver produced. I remember one clown in 2001 that was running around saying J.P. Morgan is cornering silver, they're short silver, and there's only 1 billion ounces of silver in the world, and J.P. Morgan has it's the biggest manipulation in commodity history. Well, as a matter of fact, in December of 2001, the price of silver was $4 an ounce. So he was saying J.P. Morgan was manipulating a $4 billion market. Well, that's kind of stupid. And the reason it's stupid is because the shoeshine boy at J.P. Morgan trades more than $4 billion a year. $4 billion isn't even chump change for those people. That's kind of a rounding error on their part. But you've got these guys who want to convince people to buy their newsletter, to subscribe to them. And the fact, they don't have to tell the truth. As a matter of fact, they would never make any money if they told the truth. So they lie to people. They tell people what they want to hear. There's no shortage of gold. There's no shortage of silver. There never will be. When you say there's a shortage of silver, you're saying supply and demand doesn't work. And I hate to burst people's bubble, but supply and demand absolutely does work. And I got some silver underneath my bed, and there's some price I would give it up.
Yeah, it's just going to depend on what people are willing to pay for it, right?
Yeah, of course. But in a worst case situation, this is always true. You cannot corner any commodities market. If it was possible or legal to do that, somebody like Warren Buffett could come out and buy, half the corn in the United States, and he could corner the market. Well, the trading rules preclude that, and in the worst case situation, they allow for cash settlement. So when you agree to buy a contract of gold, or when you agree to buy a contract of silver, part of the agreement between you and the commodities trading firm is that there can be cash settlement. So, there was a momentary shortage of gold in the correct size in New York back in March, but that's gone away. You cannot have a Comex default.
Excellent, Bob. So at the end of July, you wrote a very interesting article that says, don't confuse brains with a bull market. And you were saying that we're near a correction point in the metals. And as we all know, as investors in this space, maybe new investors could be frustrated by this little correction that we've seen. So could you explain to us what factors led you to conclude that we were near a correction point?
Well, I have done a lot of work and a lot of writing about contrarian investing. If you want to make money, you don't have to know anything about gold. You don't have to know anything about silver. You don't have to know anything about Tesla. What you have to know is human behavior. The mob is always wrong. If you're investing with the mob, you are going to lose money. So what you do is you figure out what the mob is doing, and then you do the opposite. It is that simple. So back in July, I was saying the DSI was up to 93, I think it was, on gold, and we would have a correction shortly. And I wasn't saying it was going to occur that day. It could occur a month later. And in fact, it occurred like 10 days later. It was a pretty accurate call. But corrections are a normal part of every investing market, and investors need to get used to it, and they need to accept the fact that when they are most bullish, that is when it is most dangerous.
So could you explain to us a little bit more about the DSI and what it is and what it means?
Okay, well, the Daily Sentiment Indicator, and you can look it up at Google, it's a website. A guy provides numbers on I think, 32 commodities markets of the daily sentiment. And basically, if the number is 0, it means that nobody wants the commodity. And if the number is 100, everybody wants the commodity. And in reality, the numbers vary from about 5 to 95. And they spend most of the time in the middle because most of the time people are neutral, either buying or selling. But when it reaches an extreme, either above 90 or below 10, you're about to have turns in the market. And you can make a lot of money now in some markets like silver. Silver goes up like a rocket, but it comes down like falling safe. And that doesn't mean you're anti-silver. It just means you accept the fact that the mob is always wrong. But there's tons and tons and tons of indicators. In April of 2011, I was looking at the numbers on the Sprott Silver ETF, and silver investors in the Sprott Silver ETF were paying a 26% premium. Silver was about $50 an ounce. I said, this is totally insane. People are paying $63 for silver, and the price of silver is only $50. They're paying a 26% premium. And that was an absolute indication of way too much bullishness. When I wrote the article, it turned out that that was the turn that day marked the top at silver. So if you can measure investor psychology accurately, you can predict turns and you can make a lot of money. And the worst case situation, take some money off the table and buy these commodities or buy these stocks cheaper. And they're cheaper now. It's a great opportunity to go in and buy stuff now.
So as you're saying about buying stocks now when they're cheap, one of your other strategies that I'd like you to share with us is by picking mining shares by looking at the liquidity of them. Can you share with us more about that?
That's a really good question. It's something that everybody should know. Not should know, they need to know. When stocks are extremely liquid, it's because people are very bullish. When stocks are illiquid, it's because they're very bearish. So the mere fact that a stock is trading 5 or 10 million shares a day is a real good indication. Maybe I should take some money off the table. When you have a correction and the stocks go down, boy, nobody wants to buy. So you can get absolutely whacked. It's not a question of calling the price correctly. It's a question of measuring the psychology correctly. And in this case, when everybody's really bullish, that's a good time to sell. And when everybody's really bearish, that's a good time to buy. Now, what I do, and this is kind of sneaky, and I've been very successful at it. Let's say a stock was $2 a share and it's dropped to $1 a share, and, it's trading like 20,000 shares a day. I'll put in a stink bid of like 10% under the lowest close yesterday if it's a stock that I like and I'd like to own at a price. But you'd be absolutely amazed how many times you can pick up dimes and quarters and people are just giving the stocks away. So low liquidity is a good time to buy and high liquidity is a good time to sell.
Excellent, Bob. So all this brings into view the bull market that we could see coming in gold and silver, and hopefully we're just at the beginning of it. So in your opinion, how big could this bull market be?
That's actually a bad question. When you talk about the price of a gold stock, you're talking about two different things. One is the price of the stock. What is the other?
The demand for it?
No.
When you're talking about the price of a stock?
Sure.
I don't know.
Okay. Can you give me a quote for gold today?
Yep.
Okay, give it to me in Zimbabwe dollars.
Might be a little bit before I can find that.
You actually can't give a quote because the currency has no value. Okay. And my point is, if you go into hyperinflation, the nominal value for gold or silver or shares might be totally meaningless. You know, you can own gold in Zimbabwe dollars. You just can't quote it because the dollar is worthless. And I believe, and you know, I'm going to either look like the world's biggest idiot or the smartest guy in the universe. I believe the U.S. government has destroyed the dollar. I believe we'll go into hyperinflation, and you cannot pick a number for gold and silver because you're trying to pick a number on gold and silver when in fact it's the value of the dollar that is significant, not the price of the gold and silver. An ounce of silver is worth an ounce of silver and always will be.
Absolutely. But more of the thing that I was getting at was, could we see this be maybe the biggest appreciation for gold and silver that we've ever seen, let's say, in the last century? Maybe that's a better way to frame the question.
No, that's a rotten way. You should have said, is it possible we're going to see the greatest prices for gold and silver and resources in history? And my answer would be yes.
Simply because the relative value of the currency is going to be so worthless, correct?
Yeah. And here's what to think about. I think that everybody listening to this realizes that they're pretty unusual people. If 1 or 2% of all investors actually paid attention to gold, silver, and resources, that would really surprise me. It's a little tiny market, okay? Now, when the general public wakes up and says, you know, gold's been going up for the last 200 days in a row, maybe I need to own some gold. When those idiots jump into gold and silver and resource stocks, you're going to see stocks that are 5 cents now that are going to be selling for $50. You're going to see things politically in the next 6 weeks that are going to knock your socks off. And when the gold and silver market gets cranking, it's going to get stupid.
So, Bob, as you're speaking about rare people, you shared with me a story before the call, and you were telling me that you've met almost all the people in the mining space, and one of your best friends is Dr. Quinton, who we've had on the show before. So can you tell us a little bit more about the story and the places you guys have traveled together?
Well, in October 2008, and that's when we could have and should have fixed the financial system, his stock, Evolving Gold, had gone from 95 cents to 15 cents. I was in Nevada, and somebody called me up and said, can you go to Colorado and meet a guy named Quinton and go see a project there called Rattlesnake? And I said, sure. So I booked a ticket to Denver, and I rented a car, and I drove up to Longmont. He picked me up the next day, and we drove to Rattlesnake. And it was really a funny story. There were so many things that were just absolutely bizarre. The season was changing, and literally, as we drove up to the project, snow started falling. And I'm looking around thinking, this is not cool, okay? You know, we could get, like, snowed in, sitting in the car, and it would be next spring before they could break us out. We drove around, and we said, Quinton points to a hill, and he says, see that hill? And I said, yeah, I see that hill. And he says, there's gold in there. Oh, great. I'm absolutely thrilled. Boy, I needed to know that. It was probably the most useless trip in terms of actually seeing anything. I saw a lot of snow. I saw some hills. We almost got stuck. They barely got the drill out in time. But it was a really funny trip. So we spent like 8 or 10 hours in a vehicle going up and coming back to Longmont. And he told me about his theory about how the gold got into the Witwatersrand, and that there were a few other basins in the world that probably had a similar amount of gold. And I listened to the theory, and I thought, you know, this is really interesting. Now, do you know how many geologists have a bullshit theory?
Could be quite a few of them.
Every one of them. Every geologist has a bullshit theory. So I didn't know whether to believe Quinton or not. He showed me a couple of pieces of paper, and I started thinking about it. Thought, he might be onto something. But we became very close friends. He came down and visited us a couple of times with his wife and my wife. I had a gold project in Mexico. He went down there. I had an airplane at the time, and we flew all over the western United States for about 2 weeks. We spent 10 days in New Zealand together. And in June of 2009, I actually paid my way. This is the only trip in 20 years where I paid my way to go see a project. But I believed in Quinton because his theory sounded valid, and I paid my way to New Zealand and to Australia, and we met with Mark Creasy, and we talked about creating the company that is now Novo Resources. And it's a great theory. He is absolutely brilliant. He's got his fingers in about 10 pies. What he really does best is do about half a day's consulting with a company every 2 or 3 months. But he understands the little tiny subtleties that makes the difference between an interesting project and a great project. Now, you had actually mentioned newfound gold. Quinton worked with Eric Sprott at Fosterville. Eric Sprott liked it, and he sent Quinton down to Australia to take a look at it, and he got Kirkland Lake to buy the mine, and Fosterville just absolutely mince money. They've got the lowest price of gold in the world. They make a fortune. And even though there were some good geologists at Fosterville, Quinton went in and said, you guys need to change your thinking a little bit. And if you'll drill here and go a little bit deeper, you're going to hit the sweet spot. Now, newfound gold had the most incredible hole that I have ever heard of. And I own some of newfound gold, and I know the guy that runs Palisades has a big piece of it. That's going to be an extraordinary project. It gives everybody the chance to look like either the smartest guy in mining or the dumbest guy, and we're going to know in about 6 weeks.
Excellent, Bob. One of the last things I'd like to touch on is a couple of your books, and you really try and teach people to think for themselves and be a contrarian. So can you tell us a little bit about the book that you're writing now?
That's very interesting because I hadn't mentioned that. I'm writing a book about Novo because I got to be part of that literally from 2008 when all Quinton and I were talking about was the theory. And then in 2009, we go up to the Pilbara and actually knock on some rocks, and he shows me some stuff. That was such a funny story. I don't know that anybody has ever written a real book about mining, okay? They give you the rah bullshit, but they don't tell you the real story. There is so much chicanery going on, and, so-and-so screwed so-and-so, and they stiffed them here, and the check bounced. There's so much really funny stuff that goes on behind the background. And I'm writing a book. The book's going to be titled What Happened to the Crow. And it's going to be a very funny book. I'm a funny writer. And it's going to be the true story of probably the greatest gold deposit in world history.
Well, that's definitely something to look forward to, Bob. And we can find all your other books on Amazon, correct?
That's correct.
Anything else that I missed that you'd like to touch on?
Yeah. We have not discussed the political system, and we should. We've got about 7 weeks prior to the election. Now, I think there's an excellent chance that there won't be an election, okay? We have an ongoing coup d'etat of the deep state that's been going on since before Trump was elected. The Democrats have made it crystal clear that they are trying to freeze the system and be as difficult as possible to work with. Now, I am not a Trump fan, not 100 years am I a Trump fan. I can list the 50 things that are wrong with him. However, if you go back to 2016, do you remember who he was running against?
Hillary
Clinton. And everybody thinks Trump was elected, and Donald Trump was not elected president in 2016. What actually happened was everybody was voting against Hillary because everybody knew how corrupt she was. Okay, if Hillary Clinton had been elected president, she'd have to have a fleet of 242 747 to just carry her baggage. She's the most corrupt politician in American history, as far as I can tell. But what do we have now? We've got a presidential candidate, I think he's 78, who is absolutely senile. And I'm embarrassed to be an American, and I'll just flat out tell you, everybody in Europe saying, are they really that stupid over there? And I go, well, yeah, I think they are. Okay. Joe Biden's senile. Okay. So they got Joe Biden, and they got this bimbo from California who could only get 3.5% of the vote when they had, 233 people running for a Democratic presidential candidate. Nobody was interested in Kamala Harris at the time, and she's playing up the whole African-American thing. And quite bluntly, the only African-American DNA in Kamala Harris came from Willie Brown.
What do you think the reason that they chose Biden would be?
They wanted to see how stupid Americans are. I think it's working.
But what would the point of that be, Bob? Just to see how stupid people are, or to push, some type of agenda through?
There is an excellent article on my website on September 10th from Hugo Salinas Price, and he says there is an ongoing coup d'etat in progress. There is foreign support. There is outside influence. And the next thing that's going to happen in the United States is a military dictatorship. And I think he's very accurate. Someone is trying to destroy the political system in the United States, and I think they're succeeding.
Well, that's a somewhat depressing note to wrap this episode on, Bob, but hopefully we have informed some people today, and, everybody has learned a little bit of something. Where's a good way to find more information about you, Bob, and about more of your writing?
Yeah, I'm 321 Gold. It's a free website. We get 100,000 people a day coming to the website. I write pieces all the time. You can go to Amazon and look up Robert Moriarty. There's some pretty pictures there, including flying under the Eiffel Tower. And the book's quite bluntly, if somebody is a serious investor and they can't spend $10 for those books, then they're idiots. Okay, the book you can read in 2 hours. If it was the worst book ever written about investing, it's worth $10.
Absolutely. There's lots of books out there, and those are very succinct.
You read the reviews, okay? You don't have to believe me. I'm an author, and all authors are liars. But if you read the reviews, you realize a lot of people think the book's pretty damn good.
Absolutely. All right, Bob, thanks very much for your time today. We'll look forward to having you back in the future.
Super deal.
Thank you. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?